Welcome to another episode of Banking Transformed, the podcast that dives deep into the trends, innovations, and strategies shaping the future of banking. I'm your host, Jim Marous, owner and CEO of Digital Banking Report and co-publisher of the Financial Brand. Traditional financial institutions are rapidly evolving in response to technological innovation, changing customer expectations, and economic uncertainties. From the rise of the digital-first banking solutions to the decline of cash transactions, from embedded financial services to the emergence of digital currencies, the very foundation of banking is being reshaped. Jan Bellens, leader in the global banking practices at EY, is joining us today on the Banking Transformed podcast. He's providing a global perspective on the state of banking transformation, regulatory frameworks, and the unique challenges and opportunities financial institutions face during these very uncertain times. Banks must reinforce their foundation for sustainable growth with innovative products and services that meet customers' needs. As the banking industry adapts to a low growth, lower rate environment, this must be achieved with higher amounts of discipline and a great leadership vision. So Jan, as one of EY's global banking leaders, you really have a unique perspective on the industry. What's been the most significant change that you've seen in the retail banking industry globally over the past few years, and what do you see as we approach 2025?
Thank you, Jim, and thanks for having me here. As I've traveled and also lived around the world, Jim, we've seen significant shift. I was based in Asia also when we saw there, the rise of the super apps and a lot of the digital drive that has come to consumer banking and to retail banking in the world. And I think we've seen that shift globally. I think where we are now is one. I think the shift to digital banking is not yet completed, not at all, and I think it's still very, very patchy. Of course, some banks are fully there, are digitally native, and are growing strong with some great examples, both in developed markets and in developing markets. I think also a lot of the legacy banks have made major progress, but I think there's still a way to go in the digitization of retail banking, with a lot of diversity across different institutions, but also across countries. And then I think that the second wave that has really started, and I already mentioned the super apps, is really about embedded finance, and making financial services and banking services in particular, making them integrated into customer experiences, into daily life of consumers. And again, a trend that has been under the current for a long time, but I think this is really the time where that will take center stage for the years to come. And I think this is really a pivotal time for that trend really to take off.
It's interesting, Jan, as we look at what's going on in the world and we look at the banking industry, we've become more aware that really the only changes we've made in the mass amount is that we've made regular banking digital, which really hasn't changed banking as we've known it. However, I think you referenced the fact that we're seeing banking change a little bit, that the reality is the future of banking won't necessarily be a faster mobile banking app on your phone that's going to look just like it would have looked on a PC before. Where are you seeing some of the biggest innovations today in the world? And can you name a few of the things that really excite you?
I think a lot of this is also where I think we got to give credit to, as I highlighted, digitally native banks, but also a lot of the fintechs, Jim, that have really been at the forefront of this innovation. And Of course, we have great successes. We also see challenges. Where I see the most exciting developments really is, and I'll come back to embedded banking. I think what are really trigger points is where, and I'm not talking about the financial industry here, but where an industry is changing and financial services are changing with it and are being integrated in it. I'm very excited personally about the mobility space, where we've seen a complete change in mobility. Of course, we've seen the rise and at the moment somewhat slower growth of electric vehicles, but we've also seen a lot of changes in the industry there, where we're moving to a direct to consumer model. Where the dealer networks are being challenged, and where also we move to different models. We move more towards leasing. We move even to subscription models, and they all have challenges. But what I find exciting is that in a lot of these cases, financial services, sometimes fintechs, sometimes progressive banks, have been part of that journey and are really integrating themselves into those models, and that I find exciting, and it's also the way forward. It doesn't mean it always works out, but I think being part of an industry transformation as a financial services company is I think absolutely the way forward. We see examples also in the health and in the healthcare space, but I think one of the things, to your point exactly, is maybe step a little bit away of how do I digitize my bank, but how do I support the economy? How do I support a specific industry in financial services support and being integrated in that? In the end, that's what banks are for. They are there to support the economy and to support where those different industries are going.
So it's interesting. We're seeing retail banking and banking in general being attacked by a lot of different things, from the way they have currencies, to the way they manage customers, to what they bring into the, as you said, what's the definition of financial services. And we're seeing really an acceleration of digital product innovation. But given current economic conditions, and I'm not going to necessarily put a thumbs up or a thumbs down if they're positive or negative, but they're certainly uncertain. How are banks balancing the need to innovate when they also have these profitability concerns?
Yeah, I think that's really the challenge, and that's probably why certainly a lot of the traditional banks have seen a challenge, Jim. And I think it's not only the economic challenges, but sometimes it's also challenges in terms of the regulatory agenda, which has hit the banks hard in terms of upgrading their technology stacks and upgrading their processes and models that certainly take costs away, or investments away from the innovation space. I think that's a real challenge. But I think certainly if you want to think and if you want to survive, long term, as a bank, it's just important to carve out those spaces, and it might mean that you may not be able to do everything. And I think that's really where I think then the difference lies between those that have done that well and less well. If you are indeed in a situation where you have less investment capacity, you have less talent to commit, maybe then you need to think harder about prioritizing the agenda. And that's also what we've seen, I think, in retail banking globally, Jim. I think some banks have had to make some really drastic cuts to their overall business portfolio, to their product portfolio, because it's just impossible to keep up with the investments that are required to innovate and to stay relevant in the market. And that's just absolutely required.
Yeah, it's interesting. You also referenced embedded banking, and it's certainly gaining traction internationally. How do you see this trend evolving, and what opportunities and threats do you see it presenting to traditional financial institutions?
I think it's interesting, Jim. At the moment, I think there's already quite a few assessments that show that embedded finance is going to be big. Certainly, at the moment, we see that if you look at the overall balance sheet for embedded finance, it's growing a lot faster than the direct or the traditional retail banking balance sheet. So I think that's certainly a trend, and I think, look, I don't think that is necessarily a challenge. Well, it's of course a challenge for the traditional banks, but there's no reason they cannot play an active role in there. It just takes an effort, and I think it's, yes, oftentimes it is the fintechs or the digitally native banks that are at the forefront of driving embedded finance and playing a role there. But I think there's certainly a role for the traditional banks to play in there as well. And I think we see a lot of good efforts across the world, actually, of banks that are playing an active role in these ecosystems and in these models, and that are also being invited by some of these embedded finance players to do so. So I think it's actually an opportunity to grab for the traditional banks. Yes, there's lots of challenges. There's challenges in terms of, what does the partnership model look like? How do we think about customer experience, and particularly customer ownership and customer data, which are challenging. So, but I think traditional banks shouldn't rest on their laurels and sit back and give that market away. I think they should be at the forefront of it and think about who to team up with and how to divide the pie that comes out of this.
It's interesting. We talk about the fact that it's possible for traditional banks to survive here and to play a role in embedded banking. But you personally, do you really see this happening, or do you see the M&A and the acquisition and consolidation really going to be changing the banking landscape? 'Cause I look and I look at things like embedded banking, and I just can't see the same number, the same size, the same type of organizations being in the future. And I certainly don't see banking being the way it is today. We've seen some fintechs in South America and in Asia and in Africa really succeed where banks didn't. And we're seeing a lot of banks that I believe are playing a game of catch up, and there just seem to be too many banks doing banking the same exact way when banking is being taken over by retailers, by car companies, by mobile phone carriers, things of this nature. How do you see the whole M&A landscape playing out with everything going on the way it is, and do you see a heavy consolidation taking place?
I do, Jim. Yes, I do see that. But to be honest, I've been saying that for years. So,
I know. Yeah.
So I would be hesitant to say I think now is absolutely the time, and
Yeah.
um, but yes, and I think it goes back a little bit, Jim, to what you highlighted before, because I think the bar is always rising, and the investments, not just the investments, but also the talent required, the you know the agile management and governance required to basically keep up in the space will only rise, and I think that's really what's going to lead to more consolidation, in particular in the US and in Europe. Um, and there's some interesting movements across both sides. Perhaps a more lenient regulation in the US, or a regulatory environment in the US, and similarly in Europe, we might see some changes. I think a lot of this has not happened because there is an element. Well, first of all, the banks got a little bit helped by the rising interest rates, so it was a bit of a delay of execution, so to speak, because a lot of the retail banks benefited from that rise in interest rates. in terms of their ROI. And then I think that there's just a lot of inertia still in the system that has held back more accelerating and more rapid consolidation. But as I said, I think it has to happen.
Yeah.
Not all of the banks will be able to keep up with the change that is required to serve retail customers going forward.
So we're talking about the global environment and regulatory environment in a state of flux in many countries. Looking at the current macroeconomic environment and the geopolitical uncertainties that have come with things such as the U.S. elections most recently, but elections elsewhere, and there's a lot of disruption and anxiety about status quo and wanting to have great amount of change in the way we view each other and the way we view businesses. How do you see what's going on globally right now possibly impacting the banking sector?
Yeah, I think it's really quite it's really quite dramatic, I think, Jim. And I think there's it's I think the first element to note is I think certainly in the board discussions that I see and in the executive committees, I think there's geopolitical risk is very, very high on the agenda from a risk perspective, and it's really, really very difficult to understand where the world is heading with a lot of the geopolitical conflict and the geopolitical divide that has really come forward. So we see a lot of banks preparing through scenario planning and really hoping to build some more muscle on the operational risk side on how to deal with some of those geopolitical risks. So certainly geopolitical risk is very, very high on the agenda. I think secondly, stepping a little bit away from the risk component, I think there's also a real challenge here that is going to be difficult for global institutions, but also regional institutions or local institutions with growth ambitions to figure out where am I going to grow. And I think in particular, after the recent U.S. elections, of course, there's quite a lot of concern about, are we going to see more division in terms of the regulatory agendas, in particular across Europe and the U.S., for example.
Yeah.
So if you look at Basel III reform and capital, if you look at the ESG agenda, if you look at even the data agenda, data and AI, if we see too much of a divide across transatlantically, I think that's going to be a challenge for the banking system as a whole to figure out, where are we going to grow? Are we going to see a major disparity in growth? And I think that is something that I think on a global perspective, we'll have to deal with, and the boards will have to deal with how to figure that out going forward.
And I'm making a lot of very broad generalizations here, but if you look at what happened in the US and what's happened in many areas of Europe, where there's a lot of anger, for lack of a better word, around the ability to move ahead, the lack of ability to move ahead by the masses. The middle class is expanding, but it's becoming less and less stable. It's not the middle class of old. When I grew up in my younger years, middle class was really the aspiration and really a good place to be. Well, the middle class right now is a much lower level in context of the overall ability to move forward. We just saw some recent numbers in the U.S. around employment and the number of people that are no longer switching jobs because they aren't available. It's amazing how so much has happened in just a number of 2 years. Technology has been hit as hard as any place, where the demand for the people and the ability for people to move ahead has really been limited. But that hits on the financial side, and when you look at the establishment, for lack, again, in quote marks, is banks are part of that establishment, but have avoided being hit by, for the most part, globally, by people getting mad at the banking environment for not making the world better. It's going to be interesting to see what happens, because I think that, as disruption happens, as fear takes over in a lot of different ways, both from a people to people basis, but also as far as how businesses help other people. Banking is going to have to take a forefront on this, and as you said, they have to prepare for the unknown that we've never seen. I mean, this isn't a depression. Because there's people making money. It's just not as much, not compared to the overall environment. Is tough to live. It's tough to feed your family. It's tough to find housing. All these elements, banking takes a role in it. I don't know what your perspective is on, is banking be able to step up to the plate and actually be a proactive force, as opposed to in some ways being viewed as a restrictive force?
Yeah, no, I think it's a good and also a challenging point, Jim. I'm certainly optimistic and hopeful there. One of the signs there, positive signs I see there, Jim, is that this can further accelerate, I think, the transformation of banking and the digitization of banking. And what I mean by that is I see some really good, examples of mostly digitally native banks around the world that step away from this traditional, sometimes, and I'll probably be guilty there too, consultant-driven view of, hey, let's all go after high net worth individuals, the affluent segments, and because that's where the money is, right?
Right,
And I
right.
think where I've seen really positive signs is a lot of the digitally native banks that are growing, again, as I said, in emerging markets, in Latin America
Yeah.
or in Asia, but also more and more so in the developing markets, is actually by serving efficiently, mostly digitally, and by serving well the broader consumer segment, the middle class, as you highlight, or even below. And if you can do that efficiently, with a digital proposition, and still make your shareholders happy, I think that's a very, very positive sign. And I think more and more, we hope, I hope to see, and I think we see more and more examples of banks doing that well. We will always have that competition in the affluent and the high net worth space, but
Yeah.
that's a pretty crowded arena, as well. And I think it will put more and more pressure on the overall banking system to become more efficient, and basically, be able to also make money serving those segments that you highlight.
So, Jan, we've been playing around the edges around, as you said, the digitally native fintech firms, the organizations that are taking care of certain elements of banking in the most efficient ways. And when we're talking about that, we're a lot of times talking about payments. And as we look at the cash use declining and digital currencies being discussed more widely, how do you think banks need to prepare for what's becoming a very major shift in our payments ecosystem and in the ability to deliver efficiently?
Yeah, I think, payments has been a very dynamic space for the last few years, Jim, and I think it's not. It certainly hasn't landed yet. I think first, certainly going forward, we'll continue to see a lot of changes, and frankly, quite a lot of changes in the infrastructure landscape, for payments. We have already seen quite a lot of changes in what I would call, the you know the edges, but I think we will now also see, and sorry, not edges, but certainly on the front end and on the back end of payments, we've seen quite a lot of changes. But the payment rails itself have been relatively stable, and I think going forward we will also see a lot of changes there. That's driven by a lot of the trends that are in the market: instant payments, account to account payments, and to your point also, CBDCs and digital currencies. So I think we'll see a very dynamic landscape there, again with successes and failures, because in the end, one of the tricky bits about payments is you need to get quite a lot of players moving in the same direction to make real changes uh, to 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 that infrastructure. And I think that's really been what's holding back some of the more radical changes. We've seen some great initiatives, sometimes government driven or government certainly sponsored in some key markets that have been able to make the change, and then often that because it is driven by government or regulator, it's not easier, but it certainly happens faster than through creating a stakeholder forum that all gets on the same page. I think the big takeaway for the banks here is, you know, I think this is definitely something where I think the banks need to pay a lot of attention. Although, and I think many of them have, payments is often certainly on the retail banking side, but even on the corporate banking side, is often the real, lifeblood of banks, and it's one of the main reasons for customers to be with the bank. It's what they look at on the customer experience front, etc. And so I think uh, already have lost some of that, relationship on the payment side to fintechs or to other players. I think they should continue to pay attention and make sure that they are certainly in the game on payments. I think the second component is certainly with those changes in the infrastructure, um, they should look at what kind of intermediary role they are still going to be able to play if we see some of those changes coming up, and in particular, how are they going to frankly also make money from that. It's already challenging for a lot of the banks to make money or to charge relevant fees in the payment space. How will that look going forward
Yeah.
when they are being disintermediated in the payments landscape? So definitely a key point of attention, I think, for retail banking, and a challenging one at that.
Along the same line, but quite different, we've seen a rise of digital currencies and a lot of talk around CBDCs. How should traditional banks prepare for this potentially very major disruption of their business model?
Yeah, I think that's the ultimate example of how how to make sure that they don't get disintermediated,
Yeah.
right? And I think if we look at some of the movements across the world, also in Europe now, in the US, I think uh, it's really important to make sure that they really understand what the would be the impact of their model, and then also finding a way to make sure that they can still add value to the model going forward. I do think there will always be a role for the banking system in that space, but I think it would be really good to one to highlight that with regulators and with the various stakeholders, but then to also to find creative means to highlight what that value add is and how that can how that can project into the future, even if we get into the digital euro or the digital dollar.
So as we look forward to 2025 and beyond, and EY obviously has so many clients globally that they work with in the financial services space. What are you recommending for your clients as being the most crucial capability that they have as soon as possible to remain competitive?
I think the key thing is really to build agility in your governance and in your management model, Jim. And what I certainly see a lot of the successful banks around the world is, when you look at responding to all of the uncertainty and all of the very dynamic landscape coming, is that it's almost impossible in a large institution to really be prepared for everything and to really to have a clean sheet strategy going forward. So to say, here's what we're going to do for the next 3 to 5 years is very, very difficult in the current context and in the current environment. So it's really about building the muscle to respond to changes. And we see that across the board. We see that on the risk front and how to respond to operational risk challenges or other challenges. And I think it's the same in the growth space. How do I quickly capture specific product opportunities or service opportunities? And I think getting more agile and being able to respond faster in a safe and secure way, with good governance all the way from the board to the front line, I think is really going to be a key challenge. Easier said than done, but I do see some good examples of institutions around the world that can actually do that. And I think as we also see, what I still and that's again easier said than done. It doesn't mean that the banks don't need to be prepared to various scenarios, where one of the things that we like to do with our clients is pretty advanced, scenario exercises. What if this happens? What if that happens? I think it's quite common in the cyberspace, but I think a lot of the institutions have expanded that more broadly. I think certainly a lot of the digital natives and the fintechs also are good at that, because they sometimes have to pivot very, very quickly to events that happen in their world, be it regulation that pops up or something that happens in the market.
That's very interesting, Jan, because we usually talk about we need to do some concrete things. We need to do this, and you're right. I think the past 4 years, or 5 years now, are a great example of the best capability you can have is the ability to be able to be ready for whatever may come down the path. I look back 5 years ago, at the beginning of COVID, and say, we thought that was the worst thing that could ever happen, and that nothing would ever disrupt the marketplace more, only to find out that the economic uncertainty that approached the marketplace 2 years after that was even a bigger impact as far as how it changed the way we did things. It became very, you look back and you go, COVID was just a matter of saying, how do you do things without physical facilities? That's simplifying it quite a bit. But that's a whole lot easier than learning about what do you do if all of a sudden interest rates double, or if they go down to zero again, or, there's all the things we discussed in this conversation. And as we look to 2025, I think a good takeaway is the fact that we really honestly don't know what the future is going to bring, but we have to use the past as a lesson to say we have to be ready for what we believe will happen and the alternative, because it's just likely the other way. So, Jan, thank you very much. It's the first time we've met, but I really appreciate you being on the show and appreciate what EY is doing to work with their clients in all industries to actually make banking and making business better at a time of massive amounts of change. So thank you very much.
Oh, thank you, Jim. It's an honor to be here. I've been following you for a very, very long time, so it's a real honor for me, and I love what you're doing in this space. So
thank you. Thanks for listening to Banking Transformed, the top podcast in retail banking and the winner of 3 international awards for podcast excellence. We appreciate your support. If you enjoy what we're doing, please take some time to show some love in the form of a review. Also, be sure to read my recent articles on the financial brand and the research we're doing for the Digital Banking Report. This has been a production of Evergreen Podcast. A special thank you to our senior producer, Leah Hassage, audio engineer, Chris Fafalius, and video producer, Will Pritz. I'm your host, Jim Roos. Until next time, remember, to remain competitive and relevant, every bank must embrace disruption and strategically build a better ecosystem, not a bigger bank.